All right, now we're going to explain credit and sovereign trust banking. All right. How this works is transparent profit instead of compounding interest. So, based on a merit score, your highest score would be 50, and that's actually bad credit or highest risk. So, the worst you could pay is 50% added to the principal. So, if you borrowed $100, you'd pay 50 on top. You pay 150 back. That's for people with no credit or they've had a repo or something, really bad credit. Your highest score would actually be a low score of 5. So you like a score of 800 today in credit, it's the equivalent of a 5. The most you'll pay is $5 for every 100 above the principal. Now here's the deal: banks have zero risk. Every loan or credit purchase is money in your own future. So when you pay it back, you pay the profit to the bank. The bank splits that profit with the depositors. Right? They have zero risk. Principal goes back to Treasury. Now, the Treasury is also the state treasurer and the county comptroller, because these credit payments on principal pay your local infrastructure, which means your cops, your fire, your teachers, and all that, as well as your state infrastructure. And the federal government really doesn't need any of this. They can issue their own money direct from the Treasury, from the House of Representatives. That's how this would work. It's a zero debt system, okay? The key is the Treasury's managing the supply of currency, okay, which is the trust dollar. I explained that in the first video. So basically, this is how it works. We use the Helios mechanism. Money actually recycles through. Now, there's also a provision for state banks. Your personal infrastructure, your home, your car, and your education loans will all be profit-free through the state banking system. So each state will have their own rules through the state treasury and their assembly and senate. So that's how that would work. So when you buy, let's say theoretically you bought a $100,000 home, you would pay it off in payments of just principal. Okay, so theoretically, those principal payments go back to Treasury, right? It's because the state banking system would run through the Treasury via commercial banks. So those loans would be profit free. So by age 30, 32, you would have your house paid off. You probably have 3 kids, and you can start planning your retirement. And you could probably retire around 50, 55, and you won't outlive your money. This is the system we could have if we abandon usury. We have to stop borrowing the dollar into existence like we are now. The bond system is slavery, all right? It's created you the debt slave. We need to get rid of this system and all of its wars and destruction, because that's all it brings. I'm offering solutions, and this is a clear one. It's not communism or any socialism. We can actually also pay for our Social Security and all necessary medical procedures, which would drive down the risk on health insurance, making health insurance affordable, so your prescriptions and doctor visits would be dirt cheap. Okay, and your membership in a collective for health coverage would be dirt cheap. Everybody could afford it. This is how you do it. All right, we're being raked over the coals, and past generations have done this. So these are the solutions we're offering. Now we need congressmen to implement this. You don't do this through a president, because the past 2 times it's been done, those presidents have been killed. They can't kill every congressman. So this is the key. You need Congress to do this. So go to thejusttax.com. Very important, thejusttax.com. Okay, we can have a better world. This isn't hard, and we won't be fighting wars all over the planet. And in the next video, I'm going to discuss the global reserve, where we can dump this 40 trillion in debt, and everybody else can dump their debt there, and we can create an international trade currency out of it at a 2% yield. So all the shipping companies will pay 2% for the service. Thank you.